Hello, everyone. This is Butch Bakani from UN Environment Program's Principles for Stable Insurance Initiative. Welcome to the third event of the PSI and Swiss Re Virtual Event Series. And on today, we're going to talk about the Insurance Sustainable Development Goals initiative being carried out by the PSI. I think we have around at least 500 participants from all over the world today. And I think we can't even, won't be surprising if that jumps to 1,000. So this is a truly global event from all regions of the world. And so we're very happy to welcome you to this important event. A few housekeeping rules that I wanted to let you know. Let's look at the next slide and look at the program. So we have a loaded agenda today. We have 2 hours. And it's we really like you to be engaged the whole time to really understand the whole initiative on insurance SDGs and to make sure that it's also sustainable. We're giving you a 5-minute break after the session on non-life insurance. The other housekeeping rule is that if you have questions, we have allotted segments for sessions 1 and 2 on non-life and life and health insurance. And you can type your question underneath the video window that we can pick up later on during the Q&A segments. So that's it for the housekeeping rules. I just wanted to reflect back on this series about sustainability leadership in insurance. In our first event last May, we talked about the links between the ongoing pandemic, public health crisis, and sustainability, where really the bottom line is that COVID-19 is a global tragedy, but it's not just an illness, but really is a symptom of a bigger problem, which is our planet's failing health. So this risk cocktail of ecosystem degradation and destruction, species loss, global warming, along with risky human behavior like illegal wildlife trade, has led to zoonotic diseases like COVID-19, which is an example where it's transferred from wild animals to humans. And this is the link that articulated in that event. And our second event last June was about sustainability risks and underwriting. This is really trying to understand how to manage downside risks in sustainability issues, from climate change to ecosystem degradation, biodiversity loss, to child labor and human rights violations, and how we can make sure that we reduce the risk related to these issues in the context of insurance underwriting. So that was really more a downside risk agenda, also a do no harm agenda. So for this third event, if we can go on to the next slide.
Working.
We're gonna talk about insurance and the connection to the UN Sustainable Development Goals. So this agenda of the UN Sustainable Development Goals, or the SDGs, was formulated in 2015 by the world's governments. It's basically the blueprint for development across the economic, social, and environmental dimensions of development until 2030. And this is what we're trying to want to discuss today. Obviously, there's 17 SDGs, and it's quite a lot to remember. There's also 169 targets underneath these global goals. But if you can summarize the SDGs in 7 words, it's those 7 words on your screen right now: prosperity for all on a healthy planet. So this is the main aim of the SDGs, and obviously there are overlaps in the different goals, and that's normal in a way, because sustainable development has 3 interlocking and mutually reinforcing dimensions of economic sustainability, social sustainability, and environmental sustainability. So, for example, if you look at climate action, that goal can easily connect to 10 other goals in the SDGs, whether it's no poverty, zero hunger, good health and well-being, all the way to partnerships for the goals. So this is the context of why we're trying to do this event today, and to see how insurance products and solutions can contribute to the achievement of the SDGs by 2030. So enough with that introduction. At this point, I wanted to go to the next slide, where we will have a powerhouse cast of speakers who will talk about this agenda of developing insurance sustainable development goals. And to kick off this discussion, I just had a chat with Swiss Re's Group CEO Christian Mumenthaler about this initiative to develop insurance SDGs that stemmed from a meeting we had at the World Economic Forum in Davos earlier this year. So let's listen to my chat with Christian and hear what he has to say. Hello, Christian. You met with your fellow CEOs from the insurance industry at the World Economic Forum in Davos earlier this year to discuss linking insurance products and solutions to the UN Sustainable Development Goals, or the SDGs. Why do you think this initiative to develop insurance SDGs is important?
You know, I'm working in the industry for a long time, and there's a lot of pride in the industry about the purpose of the insurance industry, which is to make the world more resilient through two mechanisms. One is understanding risk, costing risk, and therefore helping people to understand the risk and minimize the risk, right? Through different insurance prices, which give you benefits if you protect yourselves better, for example. And the second way it makes the world more resilient is by taking the risk, right? So that if something happens to you, the insurance industry pays. So, I mean, there's a lot of pride around that and around the sustainable nature of this business, but I don't think it's widely understood and it's widely shared. And it's totally isolated at this stage from the SDGs, which is a concept that for the first time humanity has actually set goals for now, 2 decades, which are universally accepted and defined, which is quite extraordinary. And it's clear that there is some overlap, but nobody has really thought about this overlap. So it is not clear how they link together. And we saw this as a big opportunity to be able to be part of this SDG development and better understanding how the insurance industry is contributing to the SDGs. And that's why in Davos, for the first time this year, we could get a coalition of the willing, i.e. several CEOs of the insurance industry, to work with us and try to better understand the links between what we do, our purpose, and the SDGs.
Thanks very much, Christian. So just to follow up on that, what do you think are the big opportunities for the insurance industry in developing insurance SDGs?
Well, you know, in life, I think everything that gets attention grows and everything that doesn't get attention shrinks. And I think there's a real opportunity for the insurance industry to be more conscious about how they contribute to these goals, right? To understand out of the 17 SDGs, where do we contribute, with what line of business, to start to measure that and to see whether we could increase our contribution to the SDGs. And my guess is as soon as we have more clarity and we understand that, there's going to be a whole series of steps the insurance industry can take that are not very complicated or costly to increase contribution to SDGs, which in my view will make everybody more proud, right, to work for the insurance industry. It's good for the reputation, but it's probably also good for the business because that's where the world is going. And to better understand how we can contribute to that will be a huge benefit for the whole insurance industry.
Thanks very much, Christian. So let's carry on the discussion. So the SDGs have a time horizon of 2030. So it's 2020 right now, so we have a decade. So let's fast forward 5 years. What would you want the insurance industry to have achieved in terms of the insurance SDGs by that time?
Yeah, I guess I'm very ambitious, right? And maybe overly ambitious. So, but I guess you have to be in this area. So the ideal outcome, I think, would be in the first step to understand this link between what we do in insurance and the different lines of business and the SDGs per line of business, per country, etc., to have a clearer view. Then you need to start to measure it, measure the contribution to the SDGs. I think once you measure it, you can start to think about ambitions. So that's the time where hopefully more and more willing people are joining this alliance, and we get some real momentum in the overall insurance and reinsurance industry around some goals we could set ourselves in our contributions. And then lastly, we need to execute on those. And as I said before, I think there's probably a lot of things we can do once we know how we contribute that will have a much higher impact once we understand these links. So that's the ambitious, hope and goals I would set ourselves. And again, I think since the insurance industry is a proud industry and sees the purpose it has, I think it's very fitting that they understand better how it links to the SDGs.
That's clear. Christian, a final thought. Since Swiss Re believes that sustainable business is good business, then does this essentially mean that the business of business is sustainable business?
Absolutely, yes. Sustainability for insurance enterprise is extremely important. And I think for businesses in general, I believe every business has a purpose, right? It has a reason to exist. It does something for society. Every business, you can take any one, obviously insurance too. And in insurance, we pay some claims of contracts that were underwritten 10 years ago, 20 years ago, 30 years ago, up to 50 years ago, right? We pay claims this year of things that were written and promised 50 years ago. And so this concept of sustainability is basically meaning you survive over the long term, which means the company as an, if you want, organisms that has a purpose can survive over the long term. So I would see this as a prerequisite, right, to think about sustainability as a business leader so that the enterprise can continue to exist and fulfill its purpose over the long term.
Thank you very much, Christian, for your vision, for your leadership, and also for Swiss Re's support for the initiative to develop the Insurance Sustainable Development Goals.
Thanks, Butch.
Thank you. So there you have it. That's the views of Christian Mumenthaler on this initiative on insurance SDGs. And at this point, I'd like to simply visualize what that means in practical terms. If we can go to the next slide. So what we're trying to do here is to better understand the links between insurance products and solutions and the SDGs. And of course, you ask insurers out there, many insurers would quickly say that many insurance products and solutions do contribute to the SDGs. However, there is a lack of systematic mapping of products and solutions vis-a-vis the SDGs. There is no clear master narrative for the insurance industry on how they support the SDGs, and there are no clear methods to measure impact there, including on how insurance products and solutions actually help support and achieve the SDGs. Secondly, there's also a lack of understanding of insurance products and solutions, whether existing or new, on how they support the SDGs and how they can be brought to scale and also develop if you need some new solutions for certain types of risks. And finally, there are no global goals or targets there for the insurance industry linking its insurance portfolios to the SDGs. So we have some targets there on investments, on net zero, but there's very little, if at all, on insurance portfolios and the SDGs. And if we can move on to the next slide. So what we're trying to do at the PSI is working with PSI members such as Swiss Re and others. We've tried to formulate a process on how we can develop these insurance SDGs. One is that there has to be this mapping exercise that has to be done. There you can identify gaps where there are certain things that insurance can fill vis-a-vis certain priority SDGs. And also, we need to acknowledge that there could be potential trade-offs of positive and negative contributions. And what does that mean for insurance business? Secondly, there's 17 SDGs. So ultimately, it's going to be a very massive exercise if you try to do a goal for each of the 17. So we're trying to see whether we can have a subset of priority SDGs, knowing very well that these connect to other SDGs, that they are interconnected. So it doesn't mean that if you pick one that's only specific to that goal, but actually connects to other SDGs as well. And then this ambition and goals that Christian was saying was really at the global level. Can we actually shape ambitious and quantitative insurance goals at the global level for identified priority SDGs? And then once you've set those goals, can we have an industry roadmap that will help the industry and stakeholders achieve those global goals. And at the level of insurance companies, in order to contribute to that global agenda, can we actually set insurance portfolio targets that would support those insurance SDGs? And obviously, as with anything, we need to measure progress. And this is the reason why we think that methods and toolkits there to better understand impact measurement is really important. So let's be even more concrete and go to the next slide and what this means. So together with the Swiss Re team and others, we tried to have some early ideas. Nothing is set in stone of what global insurance SDGs could look like. So that will cover a number of SDGs that we believe are relevant. So here are examples on your screen. So on agriculture, can we have insure X% more of the 230 million smallholder farmers by 2030? The same for health insurance. This is emerging new opportunity of natural ecosystems. So can we insure X% of the world's protected areas by 2030? And on the climate side of the agenda, not only looking at the adaptation side of the space, but also greenhouse gas mitigation side of the space, can we actually reduce greenhouse gas emissions of, for example, motor and property portfolios? So these are early ideas that we wanted to throw out there as potential insurance SDGs. And then once you have that, can we find a way to individually and collectively try to achieve that with the ultimate purpose of contributing to achieving the SDGs. So at this point, I also wanted to see and share with you a chat that Samantha Dunn of Swiss Re in New York had with Mike Mitchell. Mike Mitchell is the head of property and specialty underwriting at Swiss Re. And here, Mike will go a little bit further into how Swiss Re is really managing this agenda of insurance and the SDGs in terms of its underwriting portfolios and how it's steering this agenda at the company level.
Welcome, everyone. I'm here with Mike Mitchell, head of P&S underwriting here at Swiss Re, and we're going to talk a little bit about sustainability in action. Hi, Mike. You ready just to get into the questions?
Sam, hi, absolutely.
Great. So Swiss Re has a long tradition of integrating sustainability into our business. We insure, we invest, we operate, and we share our knowledge in a way that tackles sustainability challenges and creates long-term value. So why are we spending the time to deepen this within our reinsurance business unit, and why now?
Well, Sam, our sustainability story is really one that's evolving. We started by thinking mainly about our operational footprint. I mean, we're a medium-sized business. We have 10, 12,000 employees in various locations around the world. So the first step was really to look at our own carbon footprint. And then the second phase was looking at our asset base. You know, we have a lot of assets under management, and we wanted to look at ensuring that our assets were managed on an ESG perspective. More recently, we've really started to turn to the opportunities in our underwriting portfolio, in our core business, and to really try and build out a much stronger view and a much stronger outlook in terms of how we can manage the sustainability of our underwriting in our core business.
So what does that mean in concrete terms, Mike?
So what it means in concrete terms is breaking things down to manageable chunks. We manage our business along the lines of about 30 underwriting portfolios on a global basis, each one of which has an owner that's responsible for steering and strategizing around that portfolio. So we've asked the portfolio owners to make an assessment of their underwriting portfolios and the business that they're underwriting day to day, but look at it through a lens of sustainability. So mapping the SDGs, the Sustainability Development Goals, as directly as we can to the underwriting business that we have, and trying to identify in each one of those portfolios, what are the areas of the business that really support the SDGs that are most relevant, and which are those where perhaps the SDG alignment is a bit more challenging and we need to think more carefully about that.
Given that this is the decade of action, we clearly want to measure our progress here, and given that it's complex, can we do this?
Yeah, well, we can certainly make a start. So far, the work that we've done in these underwriting portfolios has been purely qualitative. So we've tried to make an evaluation of the current state of the portfolio and try to really contextualize that in terms of, what I like to think of as good guys and bad guys in each portfolio. The opportunity and the focus for us now is to start to try and move from that qualitative view to build a quantitative baseline. So how can we develop some sort of quantitative evaluation that we can consistently apply to our underwriting over time and start to measure our progress?
Yeah. Is there more that we can be doing as an industry as a whole? And is it even achievable?
Yeah, absolutely. As an industry, our fundamental basis is one of building resilience and supporting sustainability. So I think there's a really, really strong alignment with our industry's core purpose and the work that we're trying to achieve here. So I definitely think as soon as we can make that alignment most transparent, we can start to deal with some of the operational challenges and the execution challenges of moving your portfolio forwards. At the industry level, I think it's really important that we do as much as we can to start to align the commonality of assessment that we're doing here, maybe start to build some principles that we can apply more consistently throughout the industry. And we're hoping to start to lead some of that debate.
Great. So one last question, and it's just a little bit of fun, but what's your favorite sustainable product in our suite?
Yeah, I mean, there's so many, Sam. I do get quite energetic about some of them. But I think, if you look at the critical ingredients, if I think about something which is really strongly aligned to SDGs, which is leveraging the opportunities that we have in technology and something that's really innovative, because those are the ingredients of success, I think, in our business. So my personal favorite is an agriculture insurance index product, which utilizes satellite technology to make a satellite imagery of a particular location, a field or a crop, and then marries that up with some really cool algorithmic-based technology, which we've worked on with a partner called Vandesat, that helps us to extrapolate from the moisture level that's observed at the soil level down to the critical root zone for each individual crop, and tailor a product which really speaks to the anticipated health in the future of that crop. And that's something which I think is just really ticking all the boxes for me.
It's very cool. So, Mike, I really appreciate you taking the time with us today and sharing what we're doing here at Swiss Re and your thoughts. You've definitely given people some food for thought with some great examples. And thank you all for joining us. And now back to the live event that's moderated by Butch Bucani.
Okay, bye.
Thanks, Sam. Thanks, Mike. So let's get on with the discussion. And so I thought that was very interesting on how Swiss Re is moving from qualitative to quantitative assessment of its underwriting portfolios vis-a-vis the SDGs and how they're making that steer in their core business. So let's get on with our panel. And first off the bat, I'd like to call on Alison Martin. Alison was with us at the World Economic Forum in Davos earlier this year, and it would be good to hear another market perspective on this agenda of insurance SDGs. Take it away, Alison.
Great, thank you very much, Butch. I think it's probably important to reiterate a few of the things that Christian said. So insurance does provide an absolutely critical lever of support to the real economy. So we have plenty of levers, whether it's underwriting, investments, the operations, that we have to actually deliver on that. Now, so of course, we must play our part in the achievement of the SDGs. We have to recognise, of course, that the SDGs themselves were set as a framework for development. So the recent consultation looking at business benchmarks in order to provide a more business lens, I think, for their achievement is super helpful, as was the recent PSI initiative looking at actually ESG in non-life insurance, and how can you use that as a toolkit to think about how to measure for different lines of business. So for me, obviously, the question today, though, is about should the industry set collective targets in order to support the delivery? I support setting bold ambition. If we don't set ambition, we're not ever going to be able to achieve it. I do have a few kind of thoughts, though, which I think would be great to discuss. So the first probably is around, do we have a consistent measurement framework? And I think Christian touched a little bit to this. And also then, do we have a level playing field? recognizing that there's a lot of different relativities, so we have a lot of different externalities. So as we're thinking about how we could do this, how do we make sure that we have the same consistent measurement and level playing field as we think through those? We also must recognize that we have very different geopolitical and economic realities and perceptions. So I think it's super important that as we think through actually different individual companies operating, as well as actually ones within whether we're thinking insurance or we're thinking about the broader environment in which we actually operate, i.e. the real economy, that we're taking all that into account. Now, there are many areas where we need to think through trade-offs. So a few of those examples that you talked about, I mean, let's look at agriculture. And if increasing the amount of agricultural insurance would mean that in so doing, we're increasing greenhouse gas emissions, and if we're thinking about ways of doing that in a way which can actually support regenerative agriculture rather than making the same mistakes, let's face it, that many in the developed world have already made, we should learn from it. The same is probably true if we think about actually how to look at enabling kind of the future of access to energy. We know renewable energy is cheaper than fossil fuels, so how can we make sure that as we're thinking about these trade-offs of externalities, we are prioritizing a path which is different to the path that we have had historically? Now, the last point I just wanted to raise very quickly is around what I would term the proliferation of sustainability benchmarks, indices, reporting frameworks, accounting standards, you name it, whether it's financial reporting, non-financial reporting, disclosure requirements. I think if we want to really make a difference, we want to set a bold ambition, we need to have everything in a line. So we need to have the bold ambition, and then we need to have reporting and measurement frameworks which enable us to prioritize our precious resource in a way that's actually going to give us the best impact. Thanks, Butch.
Thanks so much, Alison. I'd like to follow up on that. So first, I salute you for what I would say is your ambitious pragmatism. Very bold and with a lot of conviction, but also being pragmatic about this. And I know in Davos, we discuss it with your fellow senior leaders in the industry that, this is not going to be a cakewalk, right? It's something that it's very important, but, we need to deal with certain issues. So I just wanted to ask a quick thought, Alison, is that so one of the things that we discussed with you and other CEOs was what would be the reaction or the role of insurance supervisors on this, and that's the reason why we actually have a couple of them on this panel. So we're heeding that advice. So I just wanted to get a quick insight from you on what do you think. I mean, given that you mentioned important items like measurement framework, a level playing field, trade-offs, etc. I think, what would be the potential role of insurance supervisors on this agenda?
So I think they can absolutely help support that we do have those things. So ideally, we would they can help the industry to encourage consistency by setting principles-based approaches that allow for the fact that we do operate in different jurisdictions, and we recognize and value the fact that different jurisdictions do address their local needs. But importantly, having consistent principles so that if as an organization you operate globally, you can be sure that applying the same principle is going to result in the same effect, and that you're not going to face the fact that you will be more competitive in one jurisdiction than perhaps a player who operates under a different framework approach. I mean, one thing that I think that the supervisors can really help with is making sure that as our investors think about where they're putting their capital, then if we're all providing consistent disclosures around the risks that we're taking, and obviously ESG brings a huge amount of risks, some of which are not currently reflected on people's balance sheets or in their capital, then actually they can encourage that level playing field exists and that all of us are reporting risks on a consistent basis, allowing our investors to make choices about how they would prefer to invest for a risk return.
Thank you so much, Allison. So I think that's the perfect cue to go to our next speaker, California Insurance Commissioner Ricardo Lara. Commissioner, thank you so much for waking up at 4 a.m. in California. I hope you have your quadruple espresso with you. And thank you very much for joining us. And we wanted to hear from you as well, your thoughts on this agenda of insurance SDGs. You know, what do you think of it? I know you're doing a lot of things in California, but it would be very good to hear what you have to say. Commissioner?
Thank you. Good morning from California. It's great to be with you all. Totally agree with Allison's comment. You know, from the very first emission regulations in the 1970s, California has essentially taken its own path in the United States. And we have set strong and short and long-term clean air and climate goals, and then pursued them with a cap and trade program, a renewable portfolio standard, and now our super pollutant regulations and incentives. And we have worked really hard to democratize the environmental benefits of these policies, making sure that all communities benefit from these policies. Yet now our progress is being challenged by the very forces unleashed by climate change. As you were talking earlier, Butch, the emissions from our wildfires are erasing the impact of our efforts on HFCs, on methane, on black carbon, and other greenhouse gas emissions reductions. Just to give you an economic perspective of the losses in 2017 and 2018, the total insured losses caused by California wildfires was over $25 billion, the most expensive worldwide disaster that year. And the economic disruption goes far beyond the insured losses. Businesses are interrupted and sometimes never recover, as we're seeing. And as we know, smoke degrades air quality, causing significant health impacts and agricultural damage, and impacting the ability to work in nearby communities. When we look worldwide, less than half of the extreme weather losses are insured, and putting an intense burden on local communities. Some insurance solutions do exist, including products that promote sustainability, and we need to build on that foundation. In particular, I would say our natural ecosystems have historically been underappreciated. And I want to highlight the importance of SDG focused and focus on protecting our natural ecosystems. For example, wetlands and mangroves are the most striking examples to me. Recent research estimates that the northeastern wetlands of the United States reduced damages by $625 million during Superstorm Sandy in 2012. Globally, mangroves protect more than 18 million people and lessen the flood damage to coastal assets by more than 82 billion US dollars a year. So clearly, nature can be an ally in building resilient communities. And you know, we may not have mangroves or hurricanes in every country or every region, but we all face extreme storms and heat waves. And we are beginning to recognize the importance of wetlands, lakes, urban forests, in providing protection in our communities. So, you know, in California, we are building nature-based solutions in two initiatives, I would say. We've launched the Climate Insurance Working Group, focusing on risk transfer mechanisms and nature-based solutions. And we are partnering, with Butch and the UN Principles for Sustainable Insurance in developing a sustainable insurance roadmap, focusing on innovative new products, sustainable investments, and risk management strategies. And the SDGs are, we are discussing today, are one of, one more building block, I would say, enabling us to re-envision the insurance sector to promote sustainability and measure our progress, which is more important, as Allison was mentioning. This initiative addresses protection gaps and makes our climate and sustainability policies more comprehensive. And I look forward to working to strengthen our initiative. So thank you again.
Thanks so much, Commissioner, and for all your leadership and vision in California. I think I also like how you connected the climate agenda also with the wider environmental agenda of biodiversity loss and ecosystem degradation. So people tend to silo climate as one issue and biodiversity and ecosystem as another issue, but in reality, it's all about planetary science, and these are all interconnected alongside issues like zoonotic diseases like COVID-19. So thank you for that. Commissioner, I'm quite excited because I know you are also want to share more innovation in California. You were telling me about this database that the California Department of Insurance has produced, and you want to share it with us today on how consumers can actually have a better understanding of the suite of insurance products and solutions out there as far as sustainability issues is concerned. Would you like to share that, please? Yeah.
Absolutely. Exactly. It's how do we now move from, our individual industry silo and supervisor or regular silo and into the consumer market, and how do we start talking to our consumers about the importance of these products? So I'm happy to share that the California Department of Insurance is launching a database today that I believe will be the first consumer targeted database of its kind, including internationally available products that reduce emissions and increase resiliency. This database is really meant to be expanded with more products as more products become available. And Ceres, as many of you know, an environmental NGO with expertise in financial and insurance markets, suggested a database in their recent report. So we're right on trend. And so what kind of products are we thinking about and talking about? Well, insurance products that include, for example, green rebuild coverage, providing a pathway to building back stronger, more energy efficient with lower emission buildings and vehicles. Unfortunately, every year there will be homes, buildings, and vehicles that need to be rebuilt or replaced. And insurance can help springboard these losses into cleaner technologies. I really believe insurance products that promote low emission vehicles, also by offering lower premiums for lower emission vehicles is key, and you will find that in our database. An insurance product that provides discounts for green energy use, and another that provides discounts for energy efficient certification. And of course, our commercial insurance products that give discounts for businesses who say operate hydrogen or hybrid electric buses. These are all products sold worldwide that should inspire creativity to address climate risk in the insurance sector. And now our consumers will be able to log into our database and see what's available so that we can start creating that consciousness for our consumers. And as you know, in California, this is something that's very in the minds of so many of our residents. So I'm excited to launch this database today, and again, demonstrating that we need to get out of our silos and get into start having these conversations with our consumers that are wanting to know about these products. So thank you for allowing us to do that today.
Thank you, Commissioner. And for all of you, there's the link on your screen today in front of you right now. Before I go to Connor, Allison, I just wanted to get a quick impression from you as a market participant whose products is probably on the database. I'm pretty sure it's there. But what is the sort of reaction to some of this kind of innovative tool that California has just put forward now?
So in short, I think it's great. I love it, and I would hope and can only encourage that other jurisdictions would look at what you're doing and act in a similar way. I think providing transparency to consumers, and obviously we also provide commercial insurance to businesses, but I think obviously this is focused more to consumers. But I think it's great. It's the same as investors. You need to have transparency so that people can make choices on an informed basis.
Thank you so much, Alison. I did want to put you on the spot there. We didn't give you that way ahead just this morning. So let's move on to Connor from the International Association of Insurance Supervisors. in Basel. So this is the global body of supervisors and regulators out there. Connor, you've heard from your fellow panelists on this agenda of insurance SDGs. Would you like to share with us some of your thoughts at the IAIS on this agenda?
Yeah, thank you very much, Butch. Can everyone hear me okay?
Good.
Perfect. So as Butch mentioned, I'm a representative of the International Association of Insurance Supervisors. And for those of you who are dialing in today who might not be familiar with what we do, we are the global standard setting body for the supervision of insurance. And we've been based in Basel for quite a long time, working very closely with our sister organization, the Basel Committee on Banking Supervision, and with our colleagues who also based in Madrid, look at it supervising or setting standards for the supervision of capital markets, IOSCO. So I wanted to really focus on three key messages. So the first one is that it's quite clear when we look at the SDGs, really we are talking about very complex challenges, and complex challenges require multi-stakeholder solutions. And the second thing is that the financial system, broadly speaking, and the insurance sector in particular, have an important role to play in terms of addressing and seeing advancements against the Sustainable Development Goals. And lastly, that supervisors really have a key role to play. And I think the previous speakers have touched on the important role that the industry has in terms of achievements against the SDGs. So I'll really focus on that third element, which is the constructive role that supervisors can play. And so over the past decade, the International Association of Insurance Supervisors, much like other standard setting bodies, has spent a considerable amount of energy in looking at the fault lines that were exposed by the financial crisis and developing new international standards that will hopefully address those fault lines that were exposed and ensure a more resilient financial system in the face of a future crisis. But over the past couple of years, the IIS has gone through a fairly significant strategic exercise, really taking as a good foundation that we have made significant progress in regulating the last financial crisis, and we needed to turn our attention to the horizon and really look at what are the accelerating risks, emerging risks that have the potential to really fundamentally affect the insurance sector, and what does this mean for insurance supervisors? So we really have, as an organization, identified strategically sustainable development as being an area where the IIS has a role to play in terms of facilitating a global dialogue amongst supervisors, and also in terms of interacting with policymakers and with the industry in terms of what can we as a sector do to ensure more sustainable development into the future. So a significant attention has been given in the IIS towards climate action. We've done a lot of work in this space. So we developed an issues paper looking at climate risk in the insurance sector that was published in 2018. Over the course of the following year, we looked at the task force on climate-related financial disclosures and the implementation of those recommendations by insurance supervisors. And we've recognized that, as Alison mentioned, that there is, I think, a significant appetite to see greater clarity in terms of the expectations around disclosure requirements, particularly as it relates to things like ESG. And this is something that I think the IIS recognizes as being an area for further attention in the coming years. We've also, as an organization, recognized the value of collaborating on a cross-sectoral basis on addressing things like climate action. We were one of the first standard-setting bodies to join the Network for Greening the Financial System, which is a collection of central banks that are really focused on taking action in terms of climate change. So it's really been, I think, an interesting period of time for the IIS. But I would also like to draw attention to the fact that as an organization, we are a global body. We have approximately 200 different insurance supervisory authorities that are members of our association. And of that, approximately 60% are would be classified as emerging markets and developing economies. And so we have focused a considerable amount of attention on increasing access to insurance. And this, for me, is really where, for the Sustainable Development Goals and the progress that we can make in achieving the, or we can make progress against the SDGs, is on bringing better risk management tools to traditionally underserved segments of the population. I listened very intently to hear the CEO from Swiss Re mention that the insurance industry is made up of people who are generally very proud to be part of the industry. And that's no different in the supervisory community. We've seen, I think, over the last few years, significant progress made in terms of advancing financial inclusion. And the IIS has worked very closely with our partners and through the Access to Insurance Initiative, which is a partnership between development organizations and the supervisory community through the IIS, to really look at how we can build more inclusive insurance markets. And I think through bringing insurance products to, as I said, traditionally underserved segments of the population, we actually have the opportunity to make significant progress against the SDGs. And so I'll close off with just one thought. And I think that this is, from my perspective, in a way, an opportunity to see how industry and the supervisory community can work together more collaboratively. One of the most important things that we can do as a supervisory community is to have a constructive dialogue with industry around what are the barriers and challenges that are preventing insurance products from and the right insurance product from being delivered to traditionally underserved segments of the population. I think through that, what we'll see is more resilient economies. We'll see greater support for individual, family, and business resilience. And I think quite a marked improvement in terms of where we are vis-a-vis the SDGs. So I'll leave it with that. Thanks again, Butch. And from my perspective, a really interesting conversation, and one that I hope does see some further action over the future.
Thank you very much, Connor. I just wanted to quickly follow up based on what you said. So very simple question for me, Connor. If you ask many insurance supervisors 5 years ago about climate, people would have said, that's not a priority. Now it is. And now we're talking about SDGs, which is forward-looking, 2030. A question on mandate of supervisors about, sustainability issues. How do you expect, we can address this issue of mandate? Some people are looking for explicit mandates. Some people say, like, by addressing sustainability issues, I'm supporting actually fulfilling my mandate. How do we deal with that agenda for supervisors?
The most important thing, I think, to recognize for insurance supervisors is that we have really two objectives. So the first one is policyholder protection, and the second one is contributing to the maintenance of financial stability, both domestically and internationally. And I think when we look at the mandate for insurance supervisors, it's become clear over the last few years that climate risk, in particular, is not something that is a policy issue. It has a significant impact on the insurance sector and the financial system more broadly, and that it was important to take this into account in terms of our objectives vis-a-vis policyholder protection and financial stability. What I see on the ESG side is something very similar. I think what we've seen over the last few years is a real mainstreaming of the issues around ESG. We've seen further research into how we've seen further research into the connection between ESG and financial performance. We've seen significant research into the contribution that insurance can make from a micro and macroeconomic perspective in domestic economies, but also internationally. So I think as the data becomes clear, what we're going to see is an appreciation amongst supervisors that really there is an important role to play and a contribution that supervisors can make in terms of ESG, and that this is something that does align quite closely with policyholder protection and quite closely with contributing to the maintenance of financial stability.
Thank you, Connor. And then just a quick yes or no. I mean, have you seen anything like what California is launching today, such a database?
No, and I commend Commissioner Lara and the Department of Insurance Supervision in California for the action.
All right, that's very clear. So to our insurance regulator and supervisors audience there, I think it's California has raised the bar in a way for you. It would be interesting to see how other supervisors react and see on this agenda. We are out of time. I just wanted to give the panelists a final statement. But before that, we'll catch up later on in the program. We did this pre-event global pulse survey on what are the most relevant SDGs for the insurance industry in the next 10 years. And I'll just flash those slides so to give you a final thought, food for thought before you give your final statement. And let's go on to the next slide. So in a few days' time, we got around 250 responses. A lot of them obviously are market participants, but also civil society and regulators. We go to the next slide. And we got a good split virtually across all regions. This is just a few days ago, but we just wanted to give you some food for thought for this session. And so the question here is, I think a lot of people would probably guess what is the top SDG, but what would be interesting at what are the next 4 top SDGs that people voted. And let's show that on the screen right now. If you go on to the next slide. So we asked people to select 5. Let's move on to the next slide and show the results. And so unsurprisingly, climate action is up there. But it's followed by good health and well-being, cities, infrastructure, and decent work and economic growth. And I just wanted to give that to, in reverse order, Connor, Commissioner Lara, and Allison, a final thought based on those results from the survey. Connor, you want to start?
Yeah, thanks, Butch. And from my perspective, the only thing that I find surprising on here is that there wasn't a higher score for SDG number 1. I think all of us appreciate that insurance plays a critical role in terms of supporting action around poverty. And when we think about protections for people who are right on the edge of falling back into poverty, insurance has a critical role to play, and the risks that people face and helping them to manage them. So for me, the only surprise on here is that no poverty didn't come in higher.
Yep, and that is just a pulse survey, so we'll probably do a more in-depth one later on. Commissioner, your thoughts?
Yeah, thank you. Wholeheartedly agree. The interconnectivity amongst all these issues and the role that climate plays, and it's interesting. You talked about, Butch, that just a couple of years ago, insurance regulators or supervisors, climate and sustainability wasn't necessarily part of the discussion. And I'm proud to say that at the National Association of Insurance Commissioners here in the United States, climate has risen to the top 2 issue for the organization. So you're starting to see, even in some of, as Allison was talking about, some of these jurisdictions where the politics are maybe a little different, really looking at the link between insurance products, especially innovative products, and SDGs is important in all jurisdictions now. We're starting to see this, and this is going to be a good topic that we can discuss at the National Association of Insurance Commissioners, where we're in the process of actually elevating climate insurance discussion by establishing, hopefully in the next couple of months, an executive committee task force on climate risk and resiliency. So, we here in the U.S. have some catching up to do to our European counterparts, but we're on our way again now to starting to realize that this has to be part of our agenda, and clearly the importance of climate and environmental issues are highlighted in this survey. And we're going to continue to keep working on this. So thank you again.
Thank you so much, Commissioner, for your contribution. I know you have a long day ahead. This is a super early start. You're perfectly allowed to go back to bed after this. And finally, last but not the least, Alison, we need more women leaders like you in the insurance industry, to be honest. The final thought from you on this.
Well, thanks, Butch. I was trying to think of a common denominator to these, and actually what I was thinking of was technology and the fact that, and this will be an optimistic end, that the digital transformation that we've seen accelerating, unfortunately as a result of the tragedy, but actually hopefully good will come from it, that enables us to provide, whether it's using sensor tech, I mean, Mike referenced satellites in his interview, to actually provide solutions for these issues, which perhaps we wouldn't have been able to do a decade ago. So in this decade of action, I think we should use the opportunity that technology and this digital transformation affords us to give transparency, to give more access to insurance, to give more information to consumers, whether they're retail or whether they're commercial, and to our investors who provide our capital, so that we can make better choices, because we can create a brighter future.
Thank you, Alison. And on that note, I think on that technological front, I think it's a very good call out, because if you really look at the SDGs, one of the underlying tenets of the SDGs is to leave no one behind. And we can use technology to reach out to many unserved and underserved communities out there with insurance products and solutions. So we've had a really robust discussion, despite the time constraints. Thank you so much to all three of you. Thank you also to Christian and to Mike at Swiss Re for their time. And let's get going with the next session, where we go deeper into non-life insurance products and solutions and the SDGs. Thank you very much. So at this point, hopefully, many of you participating today have had a good feel already of, what are we trying to achieve with this initiative of insurance SDGs. And that's a collaborative exercise that we're hoping to carry on in the coming months until the end of the year, and where we continue to consult people. However, in these next two sessions, one on non-life and the other one on life and health, we really want to go deeper into the company level. In terms of, obviously, we've had insights from Zurich and Swiss Re already, but we'd like to hear other market participants on how they're addressing the SDGs in the context of their corporate business strategies and operations. And to start off this discussion, I'd like to call on Renate Bleich from Munich Re in Germany, another friendly reinsurer, not just Swiss Re, but also Munich Re on board. And so, Renate, it'd be good to hear from a global reinsurer like Munich Re. What is your strategy? Are the SDGs part of your business strategy, and how are you using the SDGs in your business? Renate, are you there?
Yeah, I'm here.
Okay,
can you hear me now? Okay,
yeah,
great.
Yeah.
Hi, Butch. Hi, everybody. Thanks for having me on the session. I'd be happy to give you some more information on how we at Munich Re deal with the SDGs in our non-life business. First of all, going back to what you said about different steps on how to incorporate the SDGs into our business and into our business strategy, and how to develop a narrative, we have taken some steps, but we're far from being at the end, and far from being where we want to get at, to say that in the beginning. So what have we done? We have done some mapping analysis. We have mapped insurance products and investment activities against selected SDGs, which we felt were most material for us at Munich Re. It's interesting to compare to that list you just showed. We have very highly prioritized, for example, not surprisingly, the SDGs on clean and affordable energy and climate. And we found that we have quite a lot of products and services relating to these SDGs, be it on mitigating climate change, be it on adaptation to climate change. We also we have prioritized now poverty quite highly. We have, for example, quite a number of public-private partnerships for crop failure insurance for smallholder farmers to protect them against droughts and floods. But we also found in this mapping exercise, which I found quite interesting, some products and services for SDGs that weren't that obvious. For example, we have a unit in Munich Re dealing with alternative risk transfer solutions, and we found, for example, they had developed together with the International Committee of the Red Cross a humanitarian impact bond. Trying to boost investments into rehabilitation services supplied by the ICRC. So there were some obvious findings, as I said, finding that we do a lot on the climate front, but also some surprising findings. And when I said we're not there where we want to get it, what I mean is that it's not like the SDGs are at the core and center of our business strategy. We still have to put it higher on the agenda. But we found that for some of the business units we have, people are very well aware of the SDGs, and they incorporate them in their business strategy formulation, in their business development activities, especially when we look at business units dealing with public sector business, dealing with multinational organizations, as I mentioned, dealing with alternative risk transfer solutions. So we have some pockets within Munich Re where SDGs are used for business development and for realizing business opportunities. But we still see a challenge in scaling this up, putting the SDGs higher on the agenda, and become better at creating this narrative that has been mentioned a couple times before.
Thank you, Renate. Just a quick follow-up. So I think one of the most important things that Mike Mitchell mentioned earlier, as far as what Swiss Re is doing, is that they're going from qualitative to quantitative assessment of their underwriting portfolios vis-a-vis the SDGs. Do you think that this is also a direction that Munich Re is taking, or other reinsurers are taking to make it more effective?
Yeah, I think that is very important. I actually think this is key. And we have also started to work on developing a measurement framework and developing KPIs to measure impact that we can have with our products on the SDGs, because, and that has also been mentioned beforehand, you have to measure it to then set an ambition, set targets, and monitor these targets. So I think this is very important, and I think this is where we should be going. And this is also one of the things where I think this PSI initiative on insurance SDGs can be of great value, because collaboratively we can work on this topic of impact measurement, on creating standards and creating transparency. And I think this is very important.
Very good, Renate. Thank you so much. And I wanted to get more diversity in views. So let's move over to Japan, to our colleague Masaki Nagamura of Tokio Marine. Masaki, are you with us?
Yes, I'm here. Thank you, Butch.
Hello, Masaki. Thank you for staying up late for this. Thank you very much. And you know, we've been working with you for many years already, and we know that Tokio Marine is also doing a lot of these things. But I think from a specifically an SDGs perspective, you know, tell us what Tokio Marine is doing.
Sure, I'd be happy to. Now, I'm Masaki Nagamura with Tokio Marine, which is a Japan-based insurance company. SDGs is really big in Japan. It's partly thanks to the governmental effort, but also the private sector businesses are really paying greater attention on the topic of SDGs. From our company, our chairman, Nick Nagano, served one of the committees that was organized by the Ministry of Economy, Trade and Industry. and the committee was made up of CEO level senior management, and they ultimately published the so-called SDGs management guide to be read by business leaders. And that's the kind of picture what's happening broadly in the business sector in Japan. But within the Tokyo Marine organization, again, SDGs have become fairly popular among the management and staff level. We conduct online training on SDGs, which are made mandatory for all domestic non-life employees. And adding to that, we also organize the so-called annual CEO recognition for sustainability on a global scale. So each workplace conducts whatever sustainability related activities specific to the locality. And once a year, we collect all those information and recognize some of the leading practices. And that is really stimulated a lot of good activities from all over the globe. And that has been a very exciting process for us. And during that process, we recommend that each workplace think about SDGs. What kind of social issues are really relevant to where they are operating? So that's what's happening on an activity level. Now, as we aggregate all these, we identified the relationship between each corporate activity and the applicable goal of the SDGs. And the exercise revealed that our business is actually involved in some way in all 17 goals, which was very interesting to me. So that's what's how we are dealing with SDGs up to now.
Yes, thank you very much, Masaki. Renate, did your mapping also reveal that you are able to connect insurance products to all 17 SDGs?
Yes, to some extent, yes. We focused in this mapping exercise, we focused on some selected SDGs. So we didn't really systematically go through each and every SDG and each and every business unit, but we had some focus to concentrate on the most material SDGs first. But as I said, we found some surprising things when we did this mapping exercise, and I think once we continue with that, we'll come to the same result as Masaki just said, that we'll have lines of business and products in place to connect with each and every one of the SDGs.
Thank you, Renate. And Masaki, just a quick follow-up, a brief answer would be good. I know your title has evolved over the years. Now you're General Manager International Initiatives because you're involved in so many big, important initiatives. The PSI is only one of many. And another one is the APEC, the Asia Pacific Economic Cooperation, and where you have the risk financing stream. Do you think this agenda of SDGs and insurance could actually prosper in APEC?
Oh, yes. Well, thank you for asking that question. Yes, very much. I think that relates to Target 11.5, where it discusses substantially decreasing the direct economic losses relative to global gross domestic product caused by disasters. So that's exactly what we're trying to promote in the Asia Pacific region. My role is to really assist the finance ministry officials who have the control over their domestic budget. And nowadays, because of the large scale disasters that really wiped through the region, many finance ministers are recognizing that disaster risks are becoming their fiscal issue. So that's why it has become critical for the finance ministry officials to work together to find ways to really combat the ever-increasing threat of natural disasters, particularly if it's under the global warming situation.
Okay, thank you very much, Masaki. Let's continue to stay in Asia. At this point, we just have a couple of quick comments from your peer insurers. So we have Crystal Geng, the principal ESG expert of the Ping An Group in China. Crystal, are you with us? And you wanted to share with us a few thoughts about SDGs and what Ping An is doing in China.
Yes, hello, Butch. So you can hear me, right?
Yeah.
Okay. Hello, everyone. This is Crystal Geng from Ping An Group, China. I think first of all, I would like to introduce Ping An Group a little bit because I think most of the guests will think Ping An is a China-based insurance company, no matter on life or non-life insurance. But actually, we are one of the two financial groups with the full financial license in China. Like we have the banking, underwriting, asset management, trust, leasing, etc. So on top of the financial part, Ping An Technology right now is one of the top tech firms worldwide. So when we firstly getting to know SDG, we find it's a perfect framework to develop our diverse business in a long-term way, and it's also highly encouraged by our president Xi Jinping recently, especially from last year. So currently, Ping An has benchmarked and integrated 15 SDG goals since last year, and actively promote the realization of the different goals to seek for both commercial and also social values. I think I could give you two interesting examples of our insurance and also tech part. The first one is the financial sector. Ping An has started Ping An Rural Support Program since 2018. This program is designed to respond to the national call called poverty alleviation. China has set a target to eliminate all kinds of poverty this year. So this year will be the final year. In 2020, mainly we are providing inclusive insurance and banking service to the people in poverty, such as we develop two insurance products. The first one is called poverty alleviation insurance. The second one is called poverty returning insurance. The first one is to provide interest-free loan to rural enterprise and also the family business. Then the second one is to provide insurance to assure the people they will not be back to poverty again due to some natural disaster, diseases, or educational reasons. Because after 2020, maybe people will back to poverty again. So I think this kind of insurance is a very strong support to under the national call. Another very interesting example is from our technology sector. It's called Ping An Smart City Program. It covers 26 sectors, the everyday life service and also civil services to the citizens. We have participated in more than 31 cities and provinces on the smart city development. You could see the convenience and efficiency in China nowadays, because now you can almost do anything with your smartphone and also with your face. So I think personally, I feel it's very convenient. This is something from Ping An and China.
Okay, thank you so much, Crystal. So it's good to hear that the SDGs are alive and kicking in Asia, whether you go to Japan or China, and pretty sure in other countries as well. So we really want to make this a really global discussion. So at this point, I'd like to hear some comments from Patty Martin, from the CEO of Namibia in Namibia. Patty is also the chair of the Organization of Eastern and Southern African Insurers. Patty, are you with us? And what's the pulse on the SDGs in Africa?
Yes, thank you so much, Butch. I am here. I'll just quickly share a bit of Namibia and then a bit of Africa as well. So Namibia is a member of the United Nations as a signatory to the UN SDGs. So the country commitment is evident in the fact that the goals are captured in our national development plans. So as a progress, we've done a review recently as in 2018. So the specific goals I will quickly just highlight as to how we as a reinsurer focusing on or will be focusing on the SDGs is specifically on no poverty, zero hunger, and especially climate change. So our country, Namibia, the Zero Hunger Strategy recognizes the importance of food and nutrition security. So food insecurity affects at least 25% of the population, while most low-income family earners spend about 57% of their income on food. So agriculture is a solution to this challenge, as it can address the food security and also create employment at the same time. Now in Namibia, we've got quite a large amount of smallholder farmers. They make up approximately 54% of the total agricultural producers in Namibia. So Namibia agricultural sector faces quite significant challenges. We have had a state of emergency last year, where we had very severe droughts due to the dry land. And obviously our climate that is we very much semi-arid. So over the past couple of years, Namibia experienced severe droughts, low rainfall season, and this obviously results in the crop and livestock farming challenges, which cause volatility in the agricultural sector. And obviously this has resulted in the insurance sector not being able to offer products to the sector. However, as Namibia Reinsurance, as last year, to mitigate the adverse impact of climate change, which in turn would address food security and poverty, Namibia initiated various, specifically a pilot project in one of our regions for crop insurance, where the aim was to increase smallholder farmer resilience to climate change. So to facilitate access to agricultural credits by reducing loan defaults risk and creating opportunities for local insurance companies to expand their coverage, obviously for the small farmers. However, due to, I think what is coming out, the challenge that is coming out of here mainly is the fact that the partnership, there has been a partnership in order for this project to be successful, which involve government. It involves the private sector, which is the insurance companies. It involved developmental partners, and it has involved also obviously the small-scale farmers. However, the outcome of the project has highlighted that there's still quite a number of challenges, especially taking into account our severe drought. That obviously result in us from the insurance sector, especially as reinsurers, not to take out to be supportive of such projects. But I think as Namibia, we specifically will be focusing on these SDGs in order for us to make sure that we address the needs of Namibia. Now, as on the African continent, we have also started to focus quite significantly on making sure that we have through the PSI, the UN PSI, we have become part. We have had 3 sessions now where we have had specific interventions with regard to climate change.
Thank you so much, Patty. And I really like how you articulated different SDGs in your statement, from climate, zero hunger, which is SDG 2, and also the links to no poverty. And it's good to know that this is something that in Namibia and also the wider African continent, obviously we say Africa, but it's so many countries in Africa, right? It's so diverse, just like other regions out there, that the SDGs are also quite prominent on this agenda. So the final thought I have is I just wanted to answer one of the questions. So one of the questions, like, do you think that microinsurance is an important part of achieving the SDGs in Latin America? Quick answer, yes. But there's another question that I'm asking Veronica Scotti of Swiss Re to answer. Veronica, are you with us? There's this question that we have on, I want to pique your mind on this. Like, how can insurance promote agriculture products that support biodiversity? Do you have a thought on that?
Oh, goodness, Butch. So first of all, may I say it's a really, I've been following the session all along. It's a real joyful moment for me because I think what you guys have pulled together in the last 3 sessions is amazing. A variety of dialogue, of perspectives. And I just want to say, in as far as we can have this many voices engaged, I'm very hopeful because we need leadership to nurture and grow our commitments, and it's important that everyone finds a way of connecting. So for those on the call that haven't connected yet, I hope to see so many different ways and approaches is an incentive. Not connecting to the SDGs is not. It's the only option that is not on the table. But to your question about agriculture and biodiversity. So the way we approach that within our company, which is, as everyone knows, it's global in footprint and diverse in lines of business, we had to come up with a framework that truly speaks to principles. And so when we look at various activities, we kind of look at 2 dimensions. One is what is the positive impact, high or low, of that activity on the SDG, or does it do any harm, high or low, to the SDG? So you get a matrix, and you can see that out of that there are 4 quadrants that very clearly emerge. One where you have the excellent portfolio, where you can get a positive impact and very or no harm, and you can have on the opposite a very challenged portfolio of activities where you have a bad impact and no real upside. And then you have things in transition, right? Business that you could transition. So to your point about agriculture and biodiversity, if you can combine both, that is actually an excellent portfolio in our matrix, because what you're doing, you're helping with one of the key, I would say, most transversal of our objectives, which is protect and nurture biodiversity. It is just so fundamental for all other aspects of life on Earth. And at the same time, you're also creating sustainable agriculture, which is hitting so many other of the SDGs, and it is a very sustainable business proposition. It's a growing opportunity for all of us. So that really sits within that quadrant. But I would also want to offer another thought for the colleagues on the call. Everything that sits in that more transitioning nature is in that sub-portfolio. It's something that is, I would encourage you to look into. It's fantastic because with very little intervention, by helping our clients look through their practices. Let's take again agriculture, moving from the traditional to the regenerative form, as Alison mentioned before. You can actually move it from a transitioning space where there is an impact on water, an impact on land, on degradation, and move it in an excellent space. So doing this mapping exercises is more than an intellectual process, interesting, but it's actually an opportunity to think about what value can we bring to our clients as insurance and reinsurance companies by linking to their ability to contribute to the SDGs.
Thank you so much, Veronica, for articulating in a very short time a way basically for Swiss Re to define what is sustainable business for Swiss Re, taking into account potential trade-offs, positive and negative impacts as you develop insurance products. Thank you so much for that. At this point, we're out of time. I just wanted to share as a final thought to the audience and to the speakers the results of our Global Pulse survey on non-life insurance. We asked people to select the top 3 lines for the next 10 years in terms of business opportunities. And voila, we have agriculture there. We've talked about it extensively here, but not surprising, property. But I think natural ecosystems is quite interesting. It's way up there as top 3. that's been voted to be an emerging, a real business opportunity for the insurance industry in supporting the achievement of the SDGs in the next 10 years. Again, that's the Pulse survey, but I hope everyone has taken some insight on that. I'd like to thank each of our panelists for their respective views. I hope everyone has enjoyed the diversity of views from everyone on the panel today. At this point, we will fulfill our promise. We haven't forgotten the break. And I know we've gotten a little bit overboard with time, a little bit excited, but we'll take 3 minutes, 3-minute break to open the window and for a bio break for anyone. And we'll be back at 2:30 roughly at that time. Okay, so we'll be back in a few minutes. And thank you very much for staying on this event.
Thank you, Butch. Hi, everybody. So I'm really looking forward to covering some life and health topics here and now, because often when we talk sustainability, we have a little more focus on P&C, whereas life and health risk protection addresses many of the social sustainability challenges, as well as being linked with some of the environmental. So looking forward to hearing from our great speakers today. And please don't forget to enter questions into the question slot.
Is she already?
And without further ado, I'd like to hand over to our first panelist, Garance Ortiz Richard. She is the CEO of AXA Emerging Customers. And I'd love to hear your view, Garance, on how life and health can contribute to achieving the SDGs and how AXA Emerging Customers are using and prioritizing the SDGs. Over to you.
Thank you, Gillian. No, I was just saying you pronounced my name very well, which is quite rare. So hello, everyone. It's really a great honor to be here, and I've actually learned a lot so far. So it's quite humbling to hear whatever everyone has to say, and reassuring also. So with regards to life and health, just taking a step back in emerging markets, but I think we're starting to realize this is becoming increasingly true and mature. And that's also the beauty of the SDG versus the millennial ones, is that they're global. We all know it's the basis, right? That inclusion, so financial, economic, health, nutrition-based, gender, agricultural, digital, is a particularly difficult yet the essential challenge to take on. To me and to many, I think it's the driver behind most of the SDGs is the inclusion part, so leave nobody behind. And so, of course, along with probably most of the people here, we're convinced that the development of appropriate, relevant insurance solutions is a powerful lever, right, as everybody has been saying so far, in the implementation of the overriding ambition of the Sustainable Development Goals that is coined in Leave No One Behind. So I think this has been said quite a few times, is that inclusive insurance is explicitly named only once in the SDGs, and it's in the context of SDG Goal 8 of expanding access to financial services for all. If I just continue to take a step back, but I'm going to come back to your question very, very quickly. I know I have half a minute left. Our main ambition is to focus on stopping people from falling back into poverty. And so I just want to focus on SDG 1 for now, and with regards to health and protection. And whilst we know, and unfortunately this number of people will probably have grown because of COVID, that the percentage of people that are living in extreme poverty has fell to a new low, I think in 2015 or 2016, to below 10%. What we've started to really identify is mainly because of life and death incidences and health out-of-pocket expenses. Those are really the two main drivers. The amount of people that are falling into poverty, so that are not there today, but that are changing socioeconomic status, so today are low to mass market and slip back into poverty, is significant and growing. Social security schemes, we know, in most emerging markets, in all emerging markets, target the most vulnerable and the very poorest. And the bottom of the pyramid is also very crowded with great organizations and multilaterals and donors, etc., to be covered with regards to protection. But there is also the point I wanted to make, which I'm hoping is extra value compared to what a lot of people have said, is that the segment right above really right above the bottom of the pyramid, which we've coined the too rich to be poor, so too rich to be covered by public mandatory health schemes or even other types of life-related protection, but they're still too poor to be rich. And I really think that's also an element we have to keep in mind when we talk later on during the Q&A, hopefully, about the fact that in these SDGs, there's very little about insurance, even less about how to measure the impact, and many comments that have been made so far go, I think, in that direction. I can give an example, just one quickly, to make things very concrete. If we manage to distribute, which we've started doing, in a variety of markets, and again here, I think maybe one vulnerability is to, for inclusive insurance, focus a lot on the big markets, so India, Nigeria, China, Indonesia, because it's such a cost-sensitive business that we need volume to be able to make it sustainable. But we're also very much, I'd like to just make the point that we mustn't forget the smaller countries where there's less volume, obviously. But to give a concrete example, if you distribute hospicash, so the payment of hospitalization nights, through a digital means, this changes significantly the risks people are taking and what they're exposed to on a daily basis. And it's just about paying a hospital night. It's not about having proof of that payment. It's not about having a bill. It can be about paying for that hospital night, or it can be about replacing income or paying for medication or for transport, etc. So I think that we have to very much focus, yes, on volume, but not only, and to try and find new ways of creating sustainability, but also focus on, as simple as we can, products and protection mechanisms that cover health risks that usually are ignored by our traditional way of doing things.
Thank you. Thanks, Garance, for that opening. Thank you for specifically talking about the no poverty SDG. It's a really important one, especially when it comes to the life and health lines, but also P&C. I'd like to hand straight over to Thomas Carmona, who's the head of sustainability for Sul America, and hear his views and how his company is prioritizing the SDGs. Thomas.
Thank you, Gillian. Thank you for having me. Hello, everyone. It's important to bring what Sul America is, as we are only operating in Brazil. We are a listed company. We are the largest independent insurance in Brazil. We operate in different business lines, but health insurance is our largest business line, represents more than 80% of our revenues. We insure about 4 million people on health and dental insurance. And we operate on an environment in Brazil that health is a big issue, and we only have around 33% of the Brazilian population having access to private health. SDGs are in our agenda mainly because we do have a strong ESG journey strategy implementation. As a listed company, we set a strong governance to bring sustainability into the agenda for more than 10 years. And we do have recognitions from Dow Jones Sustainability Index, from FTSE4Good. We are part of many commitments such as PRI, PSI, Global Compact, and the Sustainable Development Alliance for Investment, and others. But it's important to mention that with our participation on Global Compact, SDGs came to the discussion initially as a process of connecting our ESG indicators with the different SDGs. But last year, we started to do the process of linking, especially SDG 3, health and well-being, with our programs for health prevention. And when we started to measure our contribution in terms of the targets, and we started this last year because our country did a work to nationalize the targets. Okay. The targets are global, but you have different targets for when you go to a country level, because some of them you are better, others you are worse. So as we had this vision from our work with the federal government and the different bodies of the federal government that set national targets, we started to look deeper in these targets, and we were able to focus on SDG 3 mainly, and to see that our health business lines connects with 10 of the 13 targets of SDGs. Just to introduce, I'll stop here, okay, and we can talk more.
Thanks, Thomas. So now we've heard about two SDGs in particular from the both of you, SDG 1 and SDG 3. I would like to take our conversation, however, over to the Reduce Inequalities SDG, as I see it as a little bit of a red flag when it comes to our activities and an opportunity for the life and health protection offerers, so insurers, to do better. And I wanted to ask you first, Thomas, and then Garance, how do you think we can do better on reduce inequalities?
Yes, it has to be in a strategic way. It has to be connected with the strategy of the business, I believe. In terms of the strategy, we are in the process of digital transformation and also bringing the care coordination. These two strategic movements, they will help us to provide more affordable products, and we have already started that. We are providing regional products. We call direct products for different cities in Brazil, and that is expanding. With the use of technologies and innovative solutions and care coordination, we believe that we will be able to provide this type of products to be more inclusive, and we believe that this is the right strategy. We look for health on a broader way. We call integral health or whole health, but we try to look on the physical side, on the mental side, and on the financial side. So that's why it's important to provide access and have financial sustainability, and that's why we are on this direction.
Thanks. Garance, do you have any comments on that topic?
I think I have too many, but maybe hopefully to really narrow it down. And thank you, Thomas, for what you said. I'm fully aligned with you. I wanted to take it maybe through the gender lens with regards to inequality, culture praise. But because we've quite focused on that within AXA, it was kicked off by a report we wrote in collaboration with the IFC and Accenture called She for Shield. Ensuring women to better protect all. And we found things that we thought were the exact opposite, for example. So a lot of things around the fact that women are less fraudulent, all these instincts that people have, and so therefore it's much better to have women clients because they're less fraudulent, etc. I'll reassure you that what we really realize is that women are not at all less fraudulent. It's just that, so we'd like to fraud just as much as, the next guy. But it's just that we don't have time because we're time poor, the sandwich segment, and this is even more true for women in emerging markets, taking care of, the whole ecosystem of their family and working, etc. So we've tried to focus in on women as women, to reduce inequalities, and it's not only dependent on us, of course, it's also linked to the infamous gap between access and usage. So there's much more access than before to digital smartphones or the internet, etc. But then again, the usage is not exactly there yet, especially with regards to women. And so we focused on that, and so looking at, as I was saying, women as women and women as decision makers, and sort of as the key pillar to making the sort of holistic protection decisions for the family. And so just to give a few examples, I think that's the easiest and the most impactful. So we know that a lot of microfinance institutions have a lion's share of their clients that are women. This is either because the women are the one in the household with the informal sort of activity, and so it's easier for them to go and take out a loan, even if it's for a productive loan for their husbands, or because they're the ones that are running the shop or the land, etc., and they're taking it out for themselves. And MFIs are more reinsured when it comes to lending to women. And so we've tried to concentrate our efforts on MFIs that favor women and take into account their specificities. So, for example, we've taken into account what we have to admit are biological differences between men and women. Equal doesn't mean the same. And so we've taken into account into several of our products complications linked to pregnancies, which is something that's initially quite difficult to do, but we all know that as soon as we try to make something simple, it's actually much harder to do. And a lot of people confuse, the word simple and the word easy. I think actually the simpler we make it for the end customer, the harder it is in the beginning, at least. Now, of course, these differences combine in terms of inequality with sociocultural barriers, right? So, for example, there are many countries where property laws will exclude women from inheriting family assets in case their husband dies. And so we've started putting in place for a while now life insurance policies that nominate wives as beneficiaries. The final topic that we've really tried to address is linked to the fact that we've realized that a lot of women, after lots of surveys and focus groups, are worried about, they're very driven by taking out life insurance policies for themselves, so if something happens to them, but they're extremely worried about who the beneficiary will be if something happens to them, because they say that a man cannot stay alone at all for more than 6 months, which I really found amusing. It was an overall comment across the world. And so he will either go to his mother or to a new wife. And this sounds caricatural, but it came across thousands and thousands of interviews. And so what will happen to their children? Will the second wife ignore them, etc.? And so we've tried to take into account that level of inequality by making the children beneficiaries for education. And so we pay directly the money to the school or to the university. So it's taking into account inequality and the SDG on gender equality from a very, very operational perspective. And I would actually love to hear from maybe other people on the call, because it's really about being very down to earth. I think I learned a lot about what many people have said so far, but it's also about, I think, physically going and delivering surveys and organizing focus groups. And we have made so many mistakes where literally we have gotten it wrong 100%, because initially we didn't do that. So I would have loved also to hear from other people if they have questions or comments on how they managed to make the inequality reduction more concrete.
So I'd love to hand over to Veronica at this point to comment on that.
Thanks, Gillian. And I think what both Thomas and Garance, from different perspectives, brought to bear is one common theme, that fundamentally a human-centric design to whatever solution we put in place that really takes into account their needs and the circumstances of the client group that we're trying to protect and address is more likely to be deeply, SDG compliant. There is no way of designing it from the comfort of our office in Zurich. And I think Garance, just with that last comment, showed incredible truth and vulnerability, the truth of all of us that very much interface with emerging consumer, public sector, developmental agenda as part of our job. We feel very connected to one of, to many of the SDGs that are, I guess, less front of mind, because less directly speak to the traditional target groups of well-established insurance companies. But it's also very clear that we cannot address their needs effectively if we don't collaborate with others that have foot on the ground. So that last mile is so critical. And I think I'm really hopeful that by designing products with the client at the center, we can make fewer mistakes, because ultimately there is a clear innate desire for all of us to address the needs fundamentally. But I mean, there are many challenges, especially in life and health, Gillian. And if you want, I'm happy to comment more. Otherwise, we can hear more from Thomas and Garance. They were fascinating.
Thank you. So I mean, we're touching on a topic around partnerships, which is an SDG in its own right, of course, and certainly when it comes to sustainability, a multilateral, multi-stakeholder approach is needed to address challenges. So I wanted to hear from both our speakers, and as well as you, Veronica, on your thoughts on partnering up, on your thoughts on the role of public-private partnerships, and also achieving national commitments. So Garance, perhaps we start with you, then Thomas, then Veronica.
Oh, people have just heard me. I hope they're not going to get too bored. But so on partnerships, I mean, it's like our lifeblood, right? And because ultimately it's the only way to reach, insofar as insurance is concerned, of course, it's the only way to reach the number of people we need to reach, because these populations represent anywhere between, as we know, 70 to 80% of any given emerging markets population, and we can't dream or fathom of reaching them by asking them to go and see an AXA agent or an AXA broker. So partnerships is our only way to even begin to envisage protecting anyone. And when I say partnerships, I mean with distribution networks that have two main qualities. The first one is they reach significant volumes of people. So it's mobile network operators, it's remittance companies, it's e-wallets, it's factories with huge floors of workers, it's mobile banking, it's non-finance banks, it's et cetera, MFIs, big MFIs that are now, as we know, really moving. And I hope if there's anything good that comes out of COVID, it is the acceleration of the digitalization of MFIs. And that's their first huge quality, right, is that they enable us to reach as many people as possible, also back to inequality. And then their other quality is that very often they are trusted household brands, because when you top up your phone, you know what, it works. And when you send money, it works. And when you go to your factory, you get paid. And your e-wallet, it also works. So it's really these both of these characteristics that make it an essential part of, to me, the business model of inclusive insurance from a private sector point of view, of course. Now there is, as you were saying, an essential role in the public-private dichotomy and partnership. And there I have less of a religion, in the sense that I think it's case by case. I have to say that as co-chair of the IDF working group on inclusive insurance, in the beginning when I arrived, and it was probably very candid on my part, I was a bit surprised because although I am a UN child, but only from my parents, I'm not used to donors so much anymore. And they were very interested, but only when we spoke about the climate. And I have to say that coming from AXA, where we have a very strong AXA climate parametric business that aims also to drive inclusive insurance, but the rest of it is really bottom up on life, health, protection, P&C, etc., beyond CatNat and climate. I was a little bit taken aback, and I think that this collaboration, the dialogue that we've had, so has COVID helped the entire world take a crash course on health? Of course. Take a crash course on prevention and protection? Again, of course. But even before it happened, I think the dialogue was opening to show that people don't care if we are protecting them with, AXA Life or AXA GI or Allianz Life or whoever it is. The debates on all of this is such that we know that life, health, protection is significantly impacted by anything climate. So I think that's where there's a key dialogue to establish, or at least to strengthen, between public and private, between donors and private, between multilaterals and even national governments, is to break our own silos. I think those partnerships can help us bundle that and can probably help us if they show that they're also there to drive it. Because if not, we're just going to fall into the lead they give.
Mm-hmm. Thank you. Thanks a lot for that, Gaurance. And Thomas, have you got anything to add to that? So yeah, there's a lot of excellent sort of content that we've heard there from Gaurance.
Yeah, just to add a little bit of perspective on the value chain of the business, I think the partnerships with our providers and brokers and that is something that we can improve. It's very necessary for innovation and for bringing a more affordable products. And I think we will see. We are already seeing, but we will see a huge social and economic impact because of this crisis that we are facing right now, and that will bring the partnership conversation to another level on the public and private partnerships with NGOs, and I think we will need to improve the strategy for facing this situation because the impact will be massive on unemployment, on inequality. We are already seeing that. It's in our face because of the situation. It was here before, but now it's much more in the face of people. And I think in terms of a private company that it's part of an important industry, and we are very organized in terms of the industry coordination with our national confederation that talks a lot with government, and we are very regulated as well. We talk a lot with our regulators, so we need to bring the social and economic discussion more with the consequence that we will face with this crisis. So I do believe that partnerships is key now.
Mm-hmm. Thank you. Veronica, you get the last word. So can you give us sort of 60 to 90 second feedback from
Gillian. So let me try and win over the hearts of those on the phone with a quick exercise of what are the challenges that I think together we can overcome to make that link between the SDGs and our life and health business more evident and more compelling. So tell me if I manage to get you. There are 4 challenges. So challenge number 1, let's focus on healthy living. At individual level, we know that we want to reduce morbidity and mortality because people that live longer, live healthier, are more productive. So for that, it's not just enough, as Thomas explained, it's not enough just to play claims, but we need to work on preventative. And you spoke about, the integrated health lifestyle. So that's something that goes a step further into empowering consumer, for instance, to manage the risks and what we call within Swiss Re modifiable risk strategies. So I think that's something that is very concrete and we could do. Challenge number 2. When we move from the individuals to the systems, we have to create resiliency. And I think Thomas was going exactly in that direction so that healthcare and welfare are modernized and they're more outcome oriented. And here I see 3 possible areas of intervention for the industry to really partner with the whole of society. Mechanisms that allow us to release funds proactively, to invest in risk mitigations and prevention for non-communicable diseases, support risk solution that actually support the adoption more broadly of expensive treatments because we don't want to leave anyone behind, and so there is an opportunity there. And also looking at intergenerational cross subsidies, because currently we do feel that the younger generations are going to carry a lot of the burdens of the future, and they're living in a very different also occupational space. Challenge number 3, I think Gaurance hit on that big time, so I'll keep it super short, is access and affordability. right? That's very, very clear. We've heard about including the underserved. One maybe point that I want to, and digitalization to reach more people. One point I want to bring up is that there are new forms of poors, if you will, or new form of people that don't get access because of the nature of their employment. So think of gig economies, think of impaired lives. This is not an emerging market necessarily situation. Think of the remittances market. So there is a lot that we can do. These are all underserved markets where a more customer-friendly and centric solution would make a big difference. And then finally, back to the climate agenda, we do know, and Butch has said it very passionately before, that climate does influence the environment in which we live, so a healthy planet, right? And I would say the pandemics, the pollution, the heat waves, the freezing cold of winters, these are all byproducts where we need to adapt. And we need to work with regulators. I was delighted to hear from the California Commissioner to make that link between health and societal living much more explicit. And there is a gap there. It's data is finding the causality, but I think as an industry, we have overcome so many issues. This is something that we can do together. And I'm very hopeful that in 2 years from now, at the very latest, we will have chipped away at all of these challenges, Gillian.
I think that's an excellent summary, Veronica, and I see that time has flown and we're actually out of time. So if I could ask for the slide showing the Life and Health Survey results to be shown. With the different lines of business, very, very interesting. Health, really the health lines are those that got the most votes there. And gosh, there's so much more that we could talk about, so much more we could dig into. But thank you very much to our speakers. Thank you, Gaurance. Thank you, Thomas. Thank you, Veronica. And I'll hand back over to Butch now.
Thank you, Gillian.
Thank you.
Thank you, everyone. Thank you, Gillian. So before I ask Veronica for final thoughts, I just wanted to ask Reto Schnarwiller, the head of Group Sustainability at Swiss Re. Reto, you wanted to share a final thought to the audience?
Yeah, thanks very much, Butch. I would like to come back quickly to Conor Dolensel in the beginning from the IAS, and he mentioned that one of the mandates of the insurance regulators is to contribute to financial stability. And I would argue it's very difficult to achieve financial stability without sustainability. And I think we all agree that the insurance industry has a lot to contribute in that respect. And we already know that from the investment side, there's clear evidence that responsible investing can actually contribute to a better risk-return spectrum. So I think that's already a strong achievement. And now on the underwriting side, it's very encouraging to hear that we're moving a bit away from just downside protection and reputational risk considerations to really providing impact, and with that staying relevant for society. And I think that's where we really can make a difference. So let me give you a number in that respect. So in 2018, the private insurance sector paid out total claims in the amount of $4.6 trillion. That's over 5% of global GDP. So I think we have a very, very strong lever, and with that, a lot to contribute to stability, but also to sustainability. And with the iSDG, I think we have now a first draft of a framework, and we invite everybody to provide feedback so we can really come up with a widely applicable framework in how we want to measure how the industry progresses towards sustainability. And let's be honest, I mean, it's not going to be easy. This will require some heavy lifting. It will require a multi-stakeholder approach because we cannot do this alone. But yeah, we need this consistency and a lot of energy from all sides to really make this happen. So I would thank you in advance for your contributions. I see this as not exactly the start, but really the beginning of a strong initiative with the UNEP FI, and really count on all your support in this. Thank you.
Thank you, Reto. That's crystal. Veronica, final thought?
Well, maybe Butch, then, since Rachel covered it so beautifully, I would maybe my final thought is a question to you. You've led us through 3 super powerful sessions. So what is to come next?
Yes, so I think, we will continue this dialogue. The iSDGs is a means to an end, just like the principles for stable insurance. So we will continue to consult market participants, supervisors on this. We will want to do a global survey in depth, and we would like to connect this again to the next Davos meeting, the World Economic Forum at the end of early next year, to continue that discussion. So a lot of will be coming up in the next few months. So this is really a teaser of what's to come. And so we will be connecting with all of you on the panel and also the participants who've expressed interest in this agenda. And if I may, I also would like to share a final statement as you look into and share some feedback. 1 minute for that. And for me, my conclusion is this. If sustainable business is good business, and the business of business is sustainable business, then the SDGs present an unprecedented sustainable business opportunity on the horizon. Through insurance SDGs, we can seize that opportunity and also help break the tragedy of the horizon associated with long-term sustainability issues. On that note, let's go to the slide on we'd like to invite you to the 4th and final event of the PSI Swiss Re series, August 31, on decarbonizing insurance and reinsurance portfolios. So it's August 31, same time, same space, same place, that's cyberspace. And so we look forward to seeing you again. Until then, thank you very much for your support, and stay safe, everyone.
Thank you, Butch, Gillian.